So it seems to me, and let me know in the comments if you think I'm crazy or not, that there are two very specific types of investors right now. It seems like there's investors who want to own the hottest AI stocks, whether it be the hyperscalers, the data center, the utility providers, let's say the software companies. There's people who want to own those high potential, high valuation AI stocks, and then there's people who want to own potentially stocks that have a bit of disruption priced into the business right now because of artificial intelligence. I mean, I can think of one right off the top of my head, like Adobe. This is a very popular stock right now because artificial intelligence is expected to have large disruptions on the business. Now, I fall into the latter category. I like to look for companies that are currently, they have some headwinds in terms of potential disruption when it comes to artificial intelligence, but ones that I feel are largely overblown. And I'm going to go over one of those companies in this video. It just reported earnings yesterday, so I'm going to have a fresh earnings outlook for you, my overall thoughts on this company, and whether or not I'm buying more after this current quarter. And as always, everybody, if you want to see the top holdings in my portfolio, or you want to grab my investing cheat sheet, you want my dividend case study, all of that is available absolutely free in the description. Just takes you a few seconds to get. But let's get right into the video, and the stock I'm going to be going over is Topicus. So a quick overview on what Topicus does, and I don't want to go into this too in depth because I actually have another full-scale video on the company that I'll link to above, but they are a vertical market software company. So they acquire and manage vertical market software companies, which are typically companies that provide software to very niche businesses. They're mission-critical pieces of software. These companies cannot operate without them. There's very little competition in the space for that particular type of software. A lot of these softwares are deeply, deeply embedded into the businesses themselves, which creates an element of sticky, recurring revenue, large switching costs for these companies to head elsewhere, so they typically don't. And one of the main issues with Topicus right now with its parent company Constellation Software is a lot of people believe that these pieces of software will be kind of made, I wouldn't necessarily say obsolete, but not as effective with artificial intelligence, gaining steam, becoming more advanced, things like that. So what people believe is these companies that are utilizing, say, a Topicus piece of vertical market software, they'll decide, hey, we want to code that piece of software ourselves. We don't need you anymore. We're going to cancel and we're going to go and do it on our own. So this is the main bear case for the company right now. Obviously, if you watch my bull versus bear case video, you will know that I think this is way overblown. I actually think that Topicus is going to be able to take artificial intelligence and turn it into a tailwind, not a headwind. But what is happening right now with a lot of these companies, we can look to Constellation, Topicus, Lumen, they are going through large drawdowns because of this potential headwind. And I think this is even further amplified because the company reported a very strong quarter and it really hasn't moved much in price at all this morning, despite it doing very, very well. And if we dive into the quarter here, and I'm actually going to go over a lot of the confusion when it comes to analyzing a company like Topicus because its results are fairly lumpy, but I'll get to that in a bit. Let's dive right into the quarter. And when we look to the results here, we see revenue, and keep in mind, this is in euro. So the company is a European software company. They primarily operate in Europe. So you're going to see currency in euro, not Canadian dollar, not US dollar. So we're looking at 387.9 million euros, which is a 24% increase year over year. We have expenses that are up 27%. You never really want to see expenses outpacing revenue, but there is going to be some particular quarters where it does. When you're looking at this, you don't want to see this be a consistent issue, but on a one-time basis, it's really not all that big of a concern. If I was going to do a way more in-depth video on Topicus, I'd probably highlight why this is occurring. This is a company that I cover over at Stocktrades Premium quite a bit. So if you do want to grab my entire thoughts on Topicus, I will lay that 99-cent offer down in the description. So if we go down to net income, and this is what is going to make Topicus very, very confusing for some people, we're going to see a loss of 120.9 euros. And why this is there is a lot of I guess you would say non-cash expenses with an acquisition-heavy company. So what Topicus will do is it will acquire these vertical market software companies and it will amortize them over a specific amount of time. And if we come back up to the income statement here, this is why you will see amortization of intangible assets. We're looking at 43.4 million euros on the quarter. So when this company buys a business, there is a lot of intangible assets. We can think of something like customer relations. We can think of intellectual property. So this amortization does not actually cost the company any money in this quarter. It did when it laid out the acquisition, but the amortization on a quarter-to-quarter basis is not a cash cost. So this is why you will very often see this company report a loss in terms of net income, but the more important metric you want to be looking at with a company like Topicus is this free cash flow available to shareholders. And we can see it's coming in at 22.3 million euros. And if we look to operating cash flow, we can actually see that it's coming in at 48.4 million euros, which is a 53% increase. These are the numbers you want to be looking at in terms of Topicus. You want to be looking at the operating cash flow and you want to be looking at the free cash flow available to shareholders. And why do you want to be looking at this? Well, the cash flow statement, which is where free cash flow comes from, will take a lot of the non-cash expenses that are on the income statement, which kind of help the company when it comes to taxes, things like that, and it will kind of add them back in to get operating cash flow, which is the number you see here. And then we subtract capital expenditures and we ultimately get that free cash flow. So the underlying numbers in terms of operating cash flow growth and free cash flow growth are still very, very solid. As mentioned, we're seeing, 53% growth in operating cash flow and a near doubling of free cash flow. Now, the one thing here is with Topicus, the more important thing to do is to look over the long term. As I had mentioned, this company can, results can get quite lumpy over the short term. There can be periods of high free cash flow, low free cash flow. So if we look to the 9 months, this is probably the better part to look at. We're seeing revenue growth of 20%. We're seeing that expense growth of 21%, effectively, the exact same as revenue growth. And then when we come down to the loss, net income, obviously, again, we have a loss here, as I had explained. But then when we look to operating cash flow, we're looking at a 14% increase and free cash flow growth of 19%. This is a bit more accurate in regards to the company, that 19% growth. This is typically what you're going to see. And the other thing I did want to explain here in terms of the lumpiness in terms of free cash flow, we can see here, this is a quarterly summary of Topicus's free cash flow available to shareholders. So as we can see, the results are all over the map. If you were to have looked at this company in June of 2025, you would think they were losing money. You would think this is a very expensive company that's burning cash. Whereas if you were to look at them a quarter before, back in March, 161.7 million in terms of free cash flow, you would think, wow, this company is dirt cheap because, annualized, that's over 640 million in free cash flow. It doesn't really work that way. We can see that during the first quarter of the year, this is typically when a company like Topicus will report its highest level of free cash flow. And this is because there's a lot of recurring revenue on this company. There's a lot of software renewals that happen, and they typically happen in the first portion of the year. I mean, we can come here and we can look at maintenance and other recurring revenue. We can see a huge chunk of this company's revenue base is recurring revenue. We're looking at total revenue of 372 million, and we're looking at recurring being 277 million of that, almost 278. So this is why you're going to see these free cash flows be so lumpy on a quarter-over-quarter basis. The better thing to do would just be to go to the last 12 months. And in that case, we can see that free cash flow per share is on a steady, up and to the right trajectory. And even if we want to go to annual to get a better idea of this, and Topicus hasn't really been trading publicly for all that long, so there's not a ton of data, but we can see back in, December of 2022, at the end of 2022, this company had 54.5 million in free cash flow. It's almost quadrupled that. It hasn't quite quadrupled it, but it's pretty close. Now, another area we want to look at is organic growth. And why do we want to focus so much on organic growth? And the reasoning for this is the companies that Topicus acquires are not really growing all that fast. So it will acquire vertical market software companies that are typically only growing in the low single-digit range. So there is a lot of incentive for a company like Topicus to report organic growth rates. You'll see this with a company like Constellation as well. And what it does is it kind of gives you an idea as to how strong the underlying businesses it has acquired are growing. So right now in the most recent quarter, we can see there was 3% organic growth. And if we come back up here to the, revenue, we're seeing 24% growth. We can get an idea that, if we're growing 3% organically, but we're growing 24% total, there's a lot of growth by acquisition with this company. And that is 100% the case. The vast majority of its growth is through acquiring new companies. So if we come back to the organic growth rates here, one thing you're going to notice is licenses, professional services, hardware, they're all growing negatively. There's negative organic growth here, meaning the underlying businesses, their revenue is actually shrinking in this department. And these numbers might, cause people to freak out a bit, but it's really not that big of an issue. And why is that? Well, when we look to total revenue of $387 million, and we look to 7% decline in organic growth in the hardware segment, it only makes up, 6.9 million of 387 million euros. So you're talking only around 1.8% of the business. The one thing, the main number you want to look at when you're looking at organic growth for a company like Topicus is this maintenance and recurring revenue, which is growing at a 6% rate. When you have this making up, 75%-ish of the business, obviously that is going to offset a lot of the negative growth in these areas. And this is by far the most important segment of the business. When you look to organic growth, look to the maintenance and recurring revenue. Now, professional services is definitely a decent chunk of the business, and it is shrinking at a 2% pace, but overall, maintenance and recurring revenue, you want to see strong organic growth in that area. And over the 9 months, we're seeing higher organic growth, 4%, primarily because the licenses and hardware, they've had a little, better years than they have quarters. Again, this is going to be lumpy overall. And if we go down here to the overall organic growth, we're seeing 3%. And this is definitely lower than other quarters. We're looking at 2023, we're looking at 8%, 7%, 5, 4, 4, 5. So we're getting down to that lower rate of organic growth, but a one-off quarter, I am not concerned whatsoever with this company. It is not really that big of an issue with me. If I see 3, 4, 5 straight quarters of sub 3% or 3% organic growth, I might start to get concerned, but this really doesn't worry me at all. So the thing I want to highlight from the quarter is the acquisition activity. Now, when we look to the first 9 months of the year, we're looking at 279 million euro in terms of acquisitions. We can see that this is a big ramp up from the first 9 months of 2024. And when we look to this acquisition activity, it is picking up quite a bit. We're looking at last 12-month acquisition activity of around 286 million euro, which would check out with the quarter. If we come back up here, we're looking at 279 million. Now, this looks way larger than usual, but I do believe some of this is due to its Asseco minority stake it took at the start of the year. And if we look to the investments in equity securities, we're looking at 168 million euro. And if we come back to the quarter here, we're going to find, the cash used in investing activities was primarily due to the 168 million euro investment in Asseco equity securities. So they acquired a minority stake in this company, and I'm not going to dive into, that portion in this video because it would run on way too long. I just wanted to more so go over the quarter, but when we think of the quarter overall, it was actually very good. I actually do not mind this quarter from Topicus at all, yet its share price just continues to go down, and I'm going to continue to accumulate shares of this company, as long as it remains at this level. If we go to valuation metrics, we're looking at a price to free cash flow of 18.3. This is one of the cheapest valuations the company has traded at, I'd say, since its IPO. It's managed to grow free cash flow available to shareholders, nearly quadruple it over, since 2022, 2023, yet its share price has only doubled. So I think there's a bit of a gap here. Yes, there's going to be a lower premium assigned to a company like this this probably because of the headwinds that could occur in terms of AI, but I do believe that the market is blowing this way out of proportion overall. It was a great quarter from the company. The shares are trading 2% lower. It was a good enough quarter that I would believe the company should be in the green today, at least, but you're likely not going to get any love for these companies over the next while here until they start to see, until the market sees that AI isn't effectively erasing these companies' businesses. But all that really means for me is I'm getting the shares at a discount, which I don't mind at all. It's a company that I will continually add over the next while here. I believe it is still cheap. It's much cheaper. I mean, I like this company at $180 a share, so it's really, really hard for me not to like it at sub 140. I will be continuing to buy without issue. Love the quarter, love the company. So that's it for the video, everybody. If you like this video, head down below, like the video, subscribe to the channel, comment down below. Let me know what company you want me to go over next. And as always, there is a ton of free resources in the description. You can head down below, grab one of them, grab all of them. All it takes is a few seconds, and you'll be diving into my top holdings. You'll be diving into my investment cheat sheet, my dividend case study. So grab those, and we'll see you next time for more great Canadian content.